Howdy traders, and welcome back with another video from the FX Big Dog. Yes, this is the weekly outlook. In the weekly outlook video, we look at trade setups based on this week, how we can be able to set ourselves up with fundamentals and technicals and connect the two. We've got a lot of fundamentals coming out this week, not just week, this month as well, because we've got not only the FOMC statement next week and rate decision, but we've got Brexit as well. Now, this evening, we've also got the Aussie rate decision, and we're not done with that either, because tomorrow we've got Aussie GDP. That's quarterly data. It's going to be a price mover. We'll check out the data in a moment right now and see what's coming out this week and how we can go ahead and approach our trading. Also, I'm happy to release a new series called the Trading Approach. Gearing Up Trading Approach. I'm excited about that. Part 1 will be released this week. And for the rest of December, I'm going to be sending out some videos about how you can trade using a gearing up approach. Now, let's go ahead and take a look at the details of today's market movers and see what's going to happen this week, how we can set ourselves up technically to take advantage of that. I'll see you right after this. Alrighty, traders, well, welcome back. And yes, we're going to be taking a look at a bunch of things this week based on fundamentals and technicals. Now, there's definitely a different approach that I'm looking at the markets recently, and that's because of the markets moving inside these ranges. In fact, if you look at a long-term outlook of the markets, we haven't really seen a lot of great trending moves. Now, there's been some currency pairs that have been really fantastic that we can take advantage of, but most of the currency pairs that we've been looking at is in large ranges. Whether it's in a wedge, whether it's in a sideways range, it's pretty much ranging. And so looking at the market a little differently as we move into 2020, we're definitely going to be able to take advantage of shorter and faster moves instead of waiting for these big moves to happen. Now, with that being said, traders, let's take a look at the fundamentals coming out this week and what we need to do to be able to protect ourselves, firstly, number one. Number two, how we'll be able to position ourselves to take advantage of those moves. Let's go ahead and take a look at the charts. So, the charts is this, but before I get into the charts, my bad, before I get into the charts, I need to go ahead and take a look at the fundamentals first. Just recently, what's just come out right now, we've just had the news come out here, and this is the cash rate. The cash rate for the Aussies, we've just seen the rate come out at 0.75%, kept it unchanged. This should be a positive move on Aussie. It normally is when they keep the rates unchanged. They normally see a very positive move on that particular pair. Now, that's what I'm expecting at the moment right now. I'm expecting some positive move on Aussie. Now, you can see right here, we also have the rate statement. The news should be good. They should be able to follow through with what they've done right now by keeping the rates unchanged. I'm not looking for any fantastic changes in the market there. Now, as I just said there, on Tuesday, we do have GDP coming out, quarterly data coming out, which is going to be exciting. Also going to be a price mover. It could be a supporter of the decision that was made today by keeping the rates unchanged. Now, we got, check this out, we got non-farm payroll. This is ADP numbers. So we have ADP non-farm employment change coming out. This is normally an indication as to what we can expect with the non-farm payroll, which is happening at the end of this month, this week on Friday. Check it out as I go further down the line. We've got Thursday. We've got data coming out for the Aussies as well as New Zealand dollar. That's also going to be a nice price mover. Oh, and don't forget, look at Wednesday. Wednesday, we also have the overnight rate. And the overnight rate for the Canadian dollar, they're expecting them to keep the rates unchanged at 1.75%. So keeping the rates unchanged seems to be the Fed moves right now across the board with its the Aussies, New Zealand, oh, hang on, they cut the rates, not them. But the Aussies and, of course, the Canadians all keeping the rates unchanged so far as it looks like it on the board right here. Now, as I go further down right here, we're going to see, as I scroll further down right here, we're going to see also some data coming out here on Friday. Friday, we have, as you can see right here, the non-farm payroll. And the non-farm payroll, including, of course, the employment rate, but very importantly, the average earnings right here. All of this data coming out on Friday, and we are definitely going to see some price movers here. Also, at the same time, At 8:30 on Friday, we also have employment change and unemployment rate for the Canadian dollar. There it is there. And that's going to be also a price mover as well. So a lot of data coming out this week that's going to be exciting for us to be able to take advantage of the price action in the market. But the most important thing we need to do right now is take a look and see how the markets are set up. So let's take a quick check on what's happening right now. We've got some US data coming out at the end of the week. We've got some Canadian data coming out on Wednesday. Rate decision keeping it unchanged at 1.75%. Then we've got some employment change coming out for the Canadians as well on Friday. So we definitely have some Canadian data. We have some US data. And then, of course, we've got some Aussie data and some New Zealand data. Now, that's the data that we're seeing currently right now that we need to pay a little more attention to. Don't forget, we've just had the rate decision for the Aussies as well. They've kept the rates unchanged at 0.75%. Great stuff. Let's check it out in the market. All right. So if we go to the setup right here, I've actually popped open Aussie JPY, and as you can see right here, we're already starting to see a very nice move on the market right now. Check it out here. So here is a very nice move right here. This is a daily time frame right now, and I'm starting to see a bullish move to the upside. So we are starting to see a bullish move. The nice thing about the Aussie JPY that I like about is that it is set up right here to actually go ahead and at least trade up above that level right there. We're looking for the price to come back to retest the top of the range right here. So it could go up to about 77, maybe even 77.50 as it starts to test those levels right there. So that's a level for the Aussie JPY. We're certainly still in a bullish channel right now. There's no reason why we should not continue to see some upside move in the Aussies. Well, these Aussie JPY. Now here is the Aussie CAD. Aussie CAD is also in a tight range. We consolidated right here. This is a daily time frame. We've been consolidating. We tested the top of the range right here. It did test this level right here. You can see a lot of resistance coming off here that created support for the market right about there. And now we're testing resistance here again. And it looks like with the news, it may be able to support that move going through this level and then coming back up to our top side of our downward trend line right here. So we're definitely looking at price moving up to around about, I would call it at 92, let's say 92.20 would probably be the level around about 92.20. So let's call it 0.9220 as the upside target to this trend line right here. All right. And it certainly looks like the market's going to push. So definitely seeing a lot of consensus across the board that Aussie is on its way up. Let's go to Aussie Swiss. We shouldn't see any different with Aussie Swiss as well. The nice thing about the Aussie Swiss is the Aussie Swiss is in this bullish channel. We did break out to the downside of the move, and so we may see price trying to work its way back up to the backside of the trend line. If it ends up taking out the high there, then we're going to the upside trend line right about here, and that's going to be at around about 0.70. So bulls still seem to be in control of the Aussie Swiss franc. In fact, we actually call this in the end zone trader. We call a buy on end zone trader, looking for price to move up to 1.70. We said let's keep buying. We're expecting price to move back up. Now the reason why we're also expecting price to continue to move up is because of this bullish channel. If you notice right here, we haven't quite got to the top of the channel. I'm going to go ahead and compress the charts a little bit right here. And you can see we haven't quite got to the top of the channel yet. All right. Price has been bouncing back and forth here, but yet we still have not able to get to the top of the channel up here. So as we get down to support down here, we now look for price to move up in this channel and then go ahead and trade up to that level. So we are below the channel here, but notice we did not take out the low. So we're still seeing higher highs and higher lows, as you can see right here. So that therefore price, if it moves up and takes out that high, it's going to be no problemo for us to get to around about that level, which we call it around about 1.70. So that's how we're seeing the Aussie Swiss franc set up right here. And clearly you can see some nice bullish movement right there. Now, if this continues, then Aussie New Zealand dollar should also see an upside move. And let's take a look and see what the technicals look like. Well, this is what it looks like right here. And Aussie New Zealand dollar, I don't think I actually looked at this pair as much, because let me tell you why. Oh no, I did. Sorry, my bad. Okay, so this is what we set up right here. If I go ahead and compress the charts, pretty much you can see right here, I've already said that traders are going to start deploying, only buying, as you can see right here. My verdict on this is only buying. All right, and we've been talking about only buying since beginning of 2019, and we've been saying let's go ahead and deploy buys as we start chasing after the top of the range up here at 1.13. In fact, we mentioned this in our end zone trader session today, that we'll certainly be looking for 1.13 to come into play. And so any sort of dipping will offer opportunities for traders to go ahead and continue to buy. So buy on Aussie, New Zealand dollar as we start going back up north. And then finally, the last Aussie pair that we have right here is Aussie US dollar. Well, that's of course with the base pair. Aussie US dollar right here is also, it was wedged. Let's go ahead and take a look right here. Yeah, it was wedged. Now, we did say, we did agree that we're going to go sell on this. We said selling only, and we said sell until we stay out of the, until it gets out of this wedge, not this wedge, but this channel, my bad. This channel, sorry, long day today. This channel right here. So we are starting to break out of the channel right here. A little concerned. We did notice that there's a lot of consolidation right here as well. And if price breaks out of consolidation, we're going to start looking for an upside move. So this right now will stay and remain selling only until we get out of this wedge. And the reason why we said this, traders, the reason why we said selling only on this particular pair is because we do not just anticipate, but we do see that there is a target down here that's been untouched right down here, and that's at 63.52. All right, and if the market's inside consolidation, we're expecting a breakout at the downside and get to that target. Now you can see here it's been bouncing inside consolidation. It's been bouncing at the tops and the bottoms. It just recently had the top, so we expect the market at least come down to the bottom right here and break out and go south, because it does look like a descending triangle that the market is set in. But then, of course, now with us in this rectangle inside this consolidation level, we're now looking at this a little differently and say, well, you know what? If we break out of this consolidation, then maybe we're on our way back up north. All right, but we're going to go ahead and take a look at that later on. But even with that being said, we did say that we're going to stay short on Aussie US dollar, but things may change along the way as we start looking at the markets differently after the news. Now, let's go ahead and take a look at the Euro Aussie. Still covering the Aussie crosses. The Euro Aussie, we said right here, we were going to go ahead and deploy. And we were deploying, let's just see here, buying only. All right, so we're going to be buying only on this. And we look for the market to go ahead and continue. Now, things could change. Look, we're in this channel, and things are busy developing here. And so we said as we're at the bottom of the channel right here, we're going to buy to the top. But if we start breaking below the channel right here, things are going to change. Now, we had a mindset of Euro Aussie bullish, but obviously with positive news coming out with the Aussies, it's going to drive this pair bearish. We're going to go bearish on this pair. So this thing may change over the next couple of days, especially if we get the data come out tomorrow, which is, by the way, if we get the Aussie GDP coming out, quarterly data comes out tomorrow, and it's positive for the Aussie, it's certainly going to go ahead and drive the Euro Aussie further bearish, and that's okay. We'll change our decision. Right now, we're buying only. We may change the decision as that comes up in the next couple of days. So let's go ahead and take a look right here as we continue. Let's see here. So that one we may have got wrong for right now. Just the pound Aussie. We're not looking too much on the pound crosses due to Brexit coming out next week. But if you take a look over here, we certainly have a nice bullish channel to the upside. And price is, in fact, testing the top right here. Now, we have spoken about this, and this is one of those pairs that we said this in today's session. We said, man, this is extremely tempting because pound Aussie certainly, pound Aussie certainly looks like it wants to move back down again towards this trend line. So there's a big move. You can look at least 900 pips going south on this particular pair right here. And so It is definitely a teaser right now, especially with Brexit coming up next week. We're going to stay on the sideline for right now, but it certainly is looking interesting for a possible sell-off on pound Aussie right here. All right, so this covers the Aussie crosses. Let's go ahead and take a look at some of the. I'm going to cover some of the Canadian crosses right here. Let's go to Canadian Swiss. Now, you remember I spoke to you about the most of the pairs inside consolidation? Well, I wasn't lying to you, because you can see right here on this particular pair as well. In fact, in most of the pairs that we've covered so far, we've either been in very short trends or channels, but most of the time it's been really consolidated. If you look over the last couple of months, we've been consolidated, especially after that big summer move we had. We haven't really seen the market break out of these ranges, or even if it's a channel, it's been a very tight channel too, whether it's bullish or bearish. So it's not a lot of big movers since the summer break. Now, if you go ahead and take a look at this particular pair right here, this pair right here is showing no different. All right, we're in a wedge, and we're at the top of the wedge right here. So what are you thinking? You're thinking price is going to move back down to the backside of this trend line right here. That's exactly what's going to happen right there. Exactly what's going to happen. So we're expecting price to move down, further down with CAD Swiss franc. So it looks like the data that we're going to report out this week may be negative for this particular pair as it moves back down. And I'll just stretch it out a little bit more to see what's going on. But yeah, we're obviously going to continue to follow through on a bearish sell-off on this particular pair. So yes, CAD Swiss franc looks for price to move down to around about 7290, maybe 7300. That's about 157 pips. Not a big bunch, because we are not, it is tightening up right here. So we've got about left here. We've got about 160 pips left in that trade. All right, got about 160 left in that trade. All right, let's go ahead. So not a big mover on this pair right here. Let's take a look at CAD's JPY. Now, CAD JPY, we said that we look for buying only on this particular pair. You can see right here, I'm looking for buying only on this. Now, why am I looking for buying only? Well, traders, because we're still inside this wedge. Well, not wedge, but this short-term channel, right? So you can see right here, we did come down to the bottom right here of this larger channel. Now we look for price to come up to the top of the channel here. We had this little bearish move right here. We've broken out of that, and price has gone ahead and started trading longer. You can also see right here that we did break out of that high. So we're definitely seeing higher highs forming and higher lows. So we're expecting price to continue to move on an upside move towards around about 95 and change, around about there. Maybe slightly lower than that. Now remember, we did say that if we are expecting some weak Canadian data, then this would send this pair heading south. But also remember, we're also dealing with JPY as well. And any sort of news that comes out based on Brexit, and no, we're not getting not Brexit, my bad. Any news coming out with the U.S. trade war, U.S.-China trade war, is absolutely going to create some sort of price mover in the market, because this is a safe haven currency pair. And anytime that happens, we're going to start seeing some market movements, or these market movers. Now, we're not going to react on news. We're going to react and trade based on technicals. Right now, the technicals are saying to us that if price continues to stay above this trend line right here, we will continue to buy it long. All right, so which means that if we see price holding over here, we want to keep buying long, and trade it towards the top here. If we get a breakout here and gets back inside this downward channel, then we may end up looking for and again, we'll probably have to look for some sort of pattern. So if price takes out the low right here, and we get a nice little crown pattern setting up right here, then we'll go ahead and start thinking about selling it short. All right. So we're definitely going to be looking for patterns, reversal patterns, to confirm that yes, we are seeing price moving in the opposite direction. Okay. So we're definitely checking out for different price patterns. All right. Let's go take a look and see EURUSD. EURUSD, again, if we're going to get some bad data coming out for the Canadians, it's going to push the EURUSD bullish. And we did go ahead and look at, if we take a look over here, I've got some data here. Let's see here. And I'm going to go ahead and pull it across here. Let's see here. All right, so we said bottom of the wedge, deploy towards, I can't see, so I'm going to have to compress this a little more, so let's do that. All right, there we go. All right, so we said we're going to hold on to this. We're at the bottom of the wedge, and so therefore, holding, we're at the bottom of the wedge. We want to see price starting to work its way back up again. So let me just compress this a little more so we can see more data here. Okay, so this is the reason why we're holding on to this one right here. We're not making any decision on the Euro Canadian, and the reason for that is we've got a lot of support right here and we've got a lot of resistance. We want to see a breakout of either direction, and then at least then if we do see a breakout, we'll be able to either chase after the top right here, all right, as price moves back up here, or we're going to go ahead and move down here and continue in this downward channel. So that's what we're looking for there. We're looking for a breakout. Markets have found a lot of support right about here, and we need to see that broken. Listen here, traders, the one thing that we don't have to do, all right, the one thing that we don't have to do, we do not have to go ahead, and I'm just going to go ahead and flip you over while I'm busy getting this sort. We don't have to force anything on, right? And we don't have to get in any trades that we don't want to trade. All right, that's the most important thing that we have to make sure that we understand. No matter how much, or at least how attractive a setup sets up, we must make absolutely certain that we are trading based on good setups, and not just based on the fact that we're just eager to get in on a trade. And I'm seeing my camera's not working so well, so I'm going to flip it over to, it's not a great copy, but I'm going to flip it over to the webcam right here. You should be able to see the webcam going on right there. So yes, so what I'm going to do is we're definitely going to go ahead and set up with a good setup right here. We want to make absolutely certain that the setup that we're looking at is going to be set up perfectly for us to be able to trade this. Now, there are other setups as well that aren't so good. There are iffy setups, and this would be probably one of those iffy setups. And if we get in an iffy setup, and I do apologize for the camera quality, it looks like my other camera's just packed up me here. But if the quality of the trade is not as good as some other trades, if we're getting much better setups than other trades, we absolutely want to go ahead and make sure that we trade those and not trade the ones that are just like iffy type of setups, all right? We don't have to be like that. So, as I go back to the chart right here, we looked at the euros. This is the EURUSD. Let's go take a look at some other Canadian crosses. Pound CAD's another one right here. And you see, now this to me is a much better setup. You see here, as we get to the backside of the top right here, we absolutely want to be a seller. Now I want to remind traders that even though I talk about selling right here, all right, you may be using tools that wait for the proper confirmations. All right. Now, when you wait for the proper confirmations, oh, there we go. When you wait for the proper confirmations, then you want to make sure that you are waiting and setting up for the market to go ahead and confirm a downside move. Now, what does that mean? That means that we are looking for price to continue to work its way back down south, and when it does work its way back down south, then we're going to be looking for, and it looks like I got my cam working there. There we go. Fantastic. Suddenly got it back working. What we're going to be doing is, traders, we're going to be looking for a setup, right? And if I say to you, we're looking to sell currently right now on the setup, and we say that we're going to sell, it doesn't necessarily mean that we're going to go ahead and start selling right away. It means that we're going to take a system that has got rules, whether you're trading manually or using an automated system. We're going to take a system and we're going to start deploying it to sell. Now, the system may not pick us up into a trade, because if price is going to continue to work its way back up, it's not going to set up that sell signal for us. But what we're going to do is you're going to say, hey, listen here, because the market's set up in this sort of structure, we want to go ahead and sell. But we're only going to sell when the trade is set up for us to sell, which means that, traders, we have to have the right conditions in order to be able to continue to sell. If the conditions aren't there, we're simply going to stand aside. Now, if you're trading a system whether it's manual or automated, then what's going to happen is when I say, hey, let's go sell, you may say, well, big dog, I'm not ready to sell, because why? And I'm just going to use one very simple example. If I use the Ichimoku cloud, I'm using a 4-hour time frame, and I'm saying, hey, listen here, I want to go ahead and sell this trade right here, then I'm going to sell it only when it gets to the bottom right here. All right, when it gets below the Ichimoku cloud and starts setting up for a sell. But until then, everything right now is telling me no, everything's bullish, everything's bullish. We should go ahead and trade. All right, we should be heading back up north. Now remember, if we've gone to the daily time frame, what have we seen here on the daily? Well, we've seen that the market's coming up to resistance, right? We've seen resistance coming up right here. So don't expect pound CAD to go much further up on the lower time frames, because we're starting to hit resistance here on the higher time frames. So there could be definitely a turnaround point right here that could get us a nice little sell-off here on the 4-hour time frame, maybe even the 1-hour, early 1-hour entry point, and then looking to continue to move down south. So those are the type of setups, those are the type of confirmations that you're going to need in order to be able to trade it. Now, the good thing is, traders, we'll be talking about in the gearing up trading approaches, we'll be talking about all these different tools that you can use to be able to enter the market based on a gearing up, gearing down approach. And that's what we're going to be talking about, something very similar to this, where you have different types of setups, just like we're having right here, and you can then go ahead and make a decision whether or not you want to take on a long-term position and chase after deep profits to the downside, or and obviously, you know, big targets, big stops, or you're going to go ahead and tighten up your stop, wait for the confirmation, make absolutely certain that that's what you want to do at a certain level, and then sell it at a certain point, but then place tighter stops, take quicker profits, get in and out of the market as much as you possibly can, but ride this wave going down south. Listen, traders, there's been so much profit generated over 2019 that I missed out on, because I was focusing on other things other than focusing on what the bigger picture is telling me, and then how to be able to approach the market on either whether it's a geared up or geared down approach, or in fact traded just a normal day. Right now, you have normal standardized trading, but then you have a gear up, gear down trading approach that you may have to change your settings a little bit, or change your approach to the different time frames, or maybe even look at your risk reward ratios. Instead of chasing after a 1-to-3, 1-to-4 risk reward ratio, maybe chase after a 1-to-2, maybe a 1.2.5. You know, just to be able to get in and to take profits a little earlier before the market turns around and starts heading in the opposite direction. So it's not that the market's not offering the opportunity. It just means that we have to adapt to what the market conditions are doing so we can take profits from those trades. So we'll definitely take a look at that a little bit later. And I'm very excited about the series launch this week. Look out for the video called Gearing Up Approach. All right, Gearing Up Trading Approach. All right, so that's the pound Canadian. So let's go to the last pair right here. I want to go to the this is New Zealand. This is a US dollar CAD right here. So US dollar CAD right here. Also, it's in a place where you pretty much want to go ahead and say there's room for the market to move to the upside right here. It is finding a lot of resistance here, but there is room for the market to break up a little higher. It did come from the bottom right here, so we are expecting to go move up a little higher. There's no doubt that US dollar CAD should continue to move up. That again is indicating that we're going to get a weaker Canadian dollar. And also take a look at the channel. We've just come off the bottom of the channel right here. There was the top, so we could see price continuing higher up as it starts chasing off the 140 on the US dollar CAD. So that's even a possibility. Also remember, we've got some data coming out in the US. All right, the Non Farm Payroll. If the Non Farm Payroll comes out on Friday positive and the average earnings is higher, which is expected, check out here. We're expecting the average earnings to go to 0.3%, and that's a bump up. And then we're looking at the unemployment change. We're looking for a bump in the unemployment change. Then we're looking at the unemployment rate, right? And the unemployment rate is going to stay fixed at 3.6%. If the numbers come out the way that it looks like right there, that may be a positive move on US dollar. All right, that may be a positive move on US dollar. We'll take a look and see what happens. All right, so that's the US dollar. What else do we have? We spoke about the Aussies. We spoke about the Canadians. We also got some news coming out for the New Zealand dollar. Not a whole bunch. I'm going to go to one pair right here, and this is going to be the New Zealand CAD. This is probably one of the pairs that I'm thinking that is the hot pair for this month. And the reason why I'm calling it the hot pair for this month, check out how the market's been consolidated for such a long time right here. And we've just recently bounced off the support level. Price is starting to work us up, and we've got a long ways to go before the price goes ahead and hits resistance up here at the top. So we're looking at about 1,061 pips to the upside. There's definitely going to be some dips for us to be able to get in, but we're certainly going to see New Zealand CAD starting to move. And if we get some weakened Canadian data out this week, it's just going to escalate and move this price higher and higher and higher. So I'm looking for this to continue to work its way back up. Now, if I zoom in a little bit right here, let's take a look and see what I've got going here. So I've gone ahead and put some fibs in right here. So I am looking for a bit of a dip, right? So there's no doubt about that. And so I'm expecting this to be wave 1, 2. This is wave 3. I'm expecting a dip and then a rally to the upside right here. So I'm expecting price to move to around about 87.52. But that's before a dip takes place first and then a rally. So I do have a trade in here already, as you can see. And we've gone ahead and actually benefit from this move a little bit. Here we can see the entry point was right about here. Now we've gone ahead and moved our stop loss. You can see the stop loss right here has been moved up, so we're banking in some profit. We've still got a lot to go for, and the reason why we moved up our stop loss is because we're anticipating that there's a very good possibility that we see a downside move first, and then the market's going to rally up. So we want to go ahead and bank in some profits on this, and allow the market to move to the upside if it needs to. But if it doesn't move to the upside and we do see this correction move come in place, at least we're going to go ahead and take some profit with our stop loss right here. So we're about call it for 30 pips away. Yeah, we're stopped about 30 pips away from where the market's trading right now. All right, so that pretty much wraps that up. So traders, a lot of details coming out right here. Let's take a look at dollar index as a close for today. Let's take a look at the dollar index here. Dollar index looks like it's holding off in a bit of consolidation. Listen here, traders, I wasn't telling you jokes earlier on when I said a lot of things are consolidating. Let me take a look right here. If you take a look at dollar index, we did break out of this consolidation right here. It's come back now and retested it, so we should see dollar falling back down south. Now, if US dollar CAD is going to rally up, this doesn't make sense, does it? No? Well, if it's a weak Canadian data, then yes, it will make sense, because nothing makes sense if you're looking at a currency pair, right, looking to rally up, but yet the currency that is the base currency, we're looking at the dollar index right now and saying, well, it's going to weaken. How can it rally? Well, it could definitely be due to seeing the Canadian dollar weaken over the next few weeks. Now, that's an interesting one, because not just do we have data coming out based on the Canadian data, the data this week, but we also got US oil could affect the movement of the Canadian dollar. So let's check out US oil. All right, and I just said that was the last one right there on, but I'm going to go ahead and take a look at this one as the last one right here. US oil. So US oil, oh man, US oil is just sideways right here. I mean, look at that. If I go ahead and compress it as much as I possibly can, you can see right here, not only do we see some sideways action here, but we do see another, like, well, it's a descending triangle. So we're expecting the US oil price to drop even further. Maybe go ahead and retest the lows down here at around about $43 a barrel. That's where we could get to there at that point. So we're going to see possibly a weaker US oil. Now, remember, we've just come off this big move down here. It's gone ahead and rallied up. And normally we get a little bit of a five-wave moving here. So let me just take a look here. If this is 1, and this is 2, this is 3 up here, this is 4. Oh my goodness, this is 5. There it is. So we're looking for a breakout to the downside right here. Yeah, so definitely looking for a breakout to the downside. Based on this format, I'm thinking lows get tested down here, around about $43 a barrel. We're going to see some weaker US oil. And if we get some weaker US oil, guess what, traders? We're going to expect a possible further move on Canadian dollar. So Canadian dollar is going to weaken over the next couple of weeks due to the fact that we're going to see some weaker US oil. And that's pretty much what it looks like. So traders, that's what we've got in news. This we've got in technical analysis. A lot of ranges, a lot of small channels going up and down. We can take advantage of those if we just go ahead and make sure that we apply the right approach, right? Gear up, gear down. What does it mean? Well, look out for the video coming out this week called trading, sorry, let me say this right. It's called Gearing Trading Approaches. That's what it is. All right, Gearing Trading Approaches. That's the series that's going to come out this week. I'm going to launch the first video this week. That's going to give you a little bit of a, get your feet wet a little bit, get you grounded, and then we'll go ahead and sort of release other sessions out the following weeks. But also, I'm also going to go ahead and invite you to my trading room. All right, invite you to my trading room, to come to the trading room for the month of December. I'm going to go have all those links and everything set up once I release this video. So make sure you check out the video, get you involved into my trading room, because it's going to be a good setup this month for us for 2020. So 2020 happening next month, and we're going to go ahead and make sure that we're prepared, that we know exactly what strategies you're going to use, and I'm going to be able to help you create a great foundation so that we can get ready for 2020. Traders, that's it from me. Thank you for watching. I do appreciate the support. Please make sure that if you haven't subscribed to this channel, please do so we can continue to send videos out, and we'll see you back in the next video. This is FX Big Dog, signing off.